Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To open today's webinar, yesterday the RBA left the cash rate steady at a record low of 1.5% during its September meeting. It is the 13th consecutive month that rates have been on hold. In a statement, Governor Lowe did, however, point to low wage growth and high household debt, which causes some concern, claiming that they will eventually constrain future spending growth. Looking ahead today, we have the release of the Australian GDP, and then followed by Thursday, we have retail sales and trade balance. The Australian GDP quarterly forecast is slightly upbeat at 0.8% after previous was at 0.3%. If we get a slightly upbeat number, this could be good for the currency and could see a re-challenge of the highs of overnight around 28. Resistance at the moment comes in at 30.65, and my view, purely for the fact is there is no momentum from the histogram on the MACD, is that the market will fail towards this region. So I still hold a strategy to sell into strength with eventual pullback to 79.45 and reassess from there. As you can see, the market is a little bit bid towards this number, as it is expected to come in a little bit stronger. So we could see this rise in the next 20 minutes or so. With the weaker US dollar overnight, does question now whether the support level at 91.70 can hold. Now, a break beneath there would give concerns and also see a rally in the euro up towards that rejection point on Friday at 119.70.75, with minor resistance coming in today at 40. Another rejection would see the focus back towards 118.65.70, but my view is that the dollar will eventually turn around. So I'm not getting overly bearish on the US dollar at the bottom of the range, nor am I getting bullish at the top of the range for euro. So I do expect to see the market eventually sell off. Well, the concerns are back for dollar yen as it looks towards that 108.30 level. Now, what started the weakness overnight was that the yen has endured firmer momentum after ongoing geopolitical tension heightens it to North Korean crisis. The yen has been viewed as a safe haven asset since the unwelcome moves by North Korea. With the recent exploded hydrogen bomb still to be claimed, though, by Western analysts, it is clear that the nuclear device test has ratcheted tension between North Korea and the US, Japan and South Korea. So at the moment, my view is that the market will rebound off 108.30, but looking at these technicals, and also if the market does continue to buy yen, then we could see a move eventually through 108.30 and down towards 106.75. But let's not get bearish at the bottom of the range and see how the US dollar plays out in the next 24 hours. With a weaker US dollar for the pound, the market has rallied overnight and now looks towards this 130.50 level. It is viewed the market will reject this region. With the Brexit concerns still lingering, we should see a pullback towards 129.75 and reassess from there. However, the technical implications on the MACD are slightly bullish, so a break above 130.50, and if the US does weaken further, then we could see a move up towards 131.60. The gold outlook at one stage did pull back overnight, but found support around 1,326. Gold stability has increased since the reaction to the weekend's news of the North Korean hydrogen bomb test. What recaptured the bullish momentum overnight was that South Korean Asian Business Daily cited an unidentified source that North Korea is preparing to another intercontinental ballistic missile test. US Newswire said overnight that the regime is begging for a war after Pyongyang on Sunday set off its most powerful nuclear bomb as yet. Now, an interesting news article here says that there's big concerns that a radiation leak at the site of where the North Korean massive bomb test is inevitable. And this is an interesting fact that the Chinese nuclear weapons expert warned after authorities in China reported that there was two earthquake tremors. The first one came in at 6.3, but the second one came in at 4.6. Authorities in China said that the tremor to the second one could be a result of a cave-in and a potential devastating collapse of the mountain where the bombs are being set off will be of great concern if we do get radiation leakage. So keep an eye on that. At the moment, the market's locked in a 1,311 to 1,360 range. Can you trade that? Well, a little bit difficult. I'm sitting on the sidelines purely for the fact is I'm not bullish at these levels. Even though we can go higher, the market's just rallying on fear factor at the moment and buying gold as a safe haven purely for the facts of the geopolitical uncertainty. And we can easily see pullbacks sharp and vicious, so be careful if you are trading long. And to wrap up with oil, my bullish view come through with $50 now on the radar. Any pullback should find support around $47.40-60. Also with the technical indications supporting this bullish move, we should see dips to be shallow, and I do expect to see this firm rally to eventuate to $50. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a wonderful day that's ahead of us.